Hey everyone, welcome to our interview where today's topic we'll be focusing on the entrepreneur in Spain. So we've got topics today like the most ideal tax setup for entrepreneurs starting out in Spain, what are the benefits you can take advantage of when being an autonomo versus creating a company, what kind of crazy holding company structures you can create to level up your tax game and lower your tax burden, what the issue is with the popular Estonian company setup, and how new destinations like the Dominican Republic are becoming more popular for setting up your company. And of course, a little bit about the Beckham Law, or as we say in the interview, the holy grail of tax laws in Spain. All right, now enough of me talking, let's get to it. So yeah, hey everyone, thanks for coming to our video today. Where we'll be focusing on tax efficient structures for entrepreneurs in Spain. So we're focusing on the entrepreneur or the solopreneur. Here we have with us joining today Jose Antonio Garcia. Jose, feel free to maybe introduce yourself in maybe like 30 seconds or a minute. Maybe tell us a little bit about your background, what you're a specialist in. Yeah, give us a little bit of a flavor. If I was a client here today and I wanted to hear a bit about you, what would you say?
Well, I'm an international tax advisor, more than a decade of experience, worked in law firms, in boutique law, in big fours, and my experience is always to assist individuals to plan their taxes when they come to Spain, to reduce them, to make them as most efficient as possible, and of course, when the time comes, to file the corresponding tax returns. If you need someone for that, I'm your guy.
Cool. Just out of personal curiosity, what brought you into sort of the tax world in the first place, or what interested you to start pursuing tax?
So I studied law and I like maths, and apparently one guy told me, well, maybe you should be good at taxes, and I say, yeah, why not? And here I am.
Love it. Well, 12 years later, and
Simple
you're
as
still
that.
enjoying it.
Yeah. One of those strange guys who actually enjoys taxes.
Oh, that's fantastic. Well, then, I mean, great for today's topic because we'll be asking you a lot of text questions. Okay, so our big headline question today is how can entrepreneurs and self-employed individuals establish tax efficient structures in Spain? So, yeah, I mean, it's a huge topic here for a lot of our clients. What do you have to say about that topic?
Of course, it's essential for those who wish to carry a business activity to structure it in the most tax efficient manner. Because this can not only lead to several benefits when it comes to business and individual taxation, but also in social security obligations, wealth taxation, or even, God forbids, in inheritance tax. The main idea when it comes to tax optimization, from my point of view, is always tax planning. Setting a new business structure in Spain or abroad, or reorganizing your business structure that you have abroad, is something that most individuals think at the same time that when I'm planning to arrive to Spain. So it's very important to think ahead, as this can lead to considerable tax profits. I'm not only talking about the Beckham Law regime, which we will elaborate later, but even when this has ended on, or when you're not eligible for this, having a company or a business structure that carries this business activity can lead to a lower personal income taxation. So when it comes to individuals that already are in Spain and or already have been for a certain amount of time, the simplest and most common structure is to create in Spain an SL, Sociedad Limitada. And then, of course, you split your income between salary and dividends. Why is this important? Because in Spain, when you're a tax resident, the income is divided in two big groups, general income and savings income. General income, which includes mostly employment income, is taxed at progressive tax rates. Depending on the region, it can go up to 52% in the highest bracket. You perceive more than 300K. Same thing happens with freelancing income. Freelancing income goes at a progressive tax rate, and it can go also to this 52%. On the other hand, savings income, such as dividends from a business company that you may own, are going to be taxed from 19 to 28% tops. So here you can see that depending how you choose to split it, it will have an impact on the highest tax rate, 28 against 52. From my point of view, usually I suggest considering incorporating a company in Spain when you're going or expecting to perceive over 150, 180K per year in annual taxable income, which means the profit you will have. Of course, this will carry certain administrative obligations and expenses, but on the long run, it can be efficient and simple and can allow you to reduce up to 10% in your taxation and still profit from the Spanish public health system. Other possibilities from people who are already carrying a business activity in Spain is incorporate the company in another EU country with a very low corporate income tax. For instance, I'm thinking about Bulgaria with a 10%, and some people would eventually think about Estonia, but it still has a corporate income tax quite high, or Cyprus, which can be quite reduced, or outside of the European Union, and then distribute the income between, as I was saying, salary and dividends profiting from a considerable reduction on your social security contributions and being, of course, off the Spanish public health system, and again, a reduction on the effective tax rate due to the above said difference between the tax rates for general income and savings income. So when it comes to individuals that are planning to arrive, as I was saying before, when it comes to the tax planning, this is a very big opportunity for them to plan. Possibility of being a remote employee of your own company abroad, or hire yourself in Spain through an employer of record company in Spain, such as Deal, Oyster, Remote, similar, makes you eligible for the Beckham Law regime. The Beckham Law regime is the holy grail of taxation. You are excluded from taxation on the savings income from abroad, dividends among others, and you're only subject on your worldwide employment income at a flat 28%. Besides, wealth tax is off the table and Modelo 720 is off the table. So as you can imagine, this is a considerable reduction of your taxable income and puts a lot of things outside of the equation. Of course, in case you decide to structure in this way, there are certain red flags that must be avoided in order to avoid the Spanish tax authorities, considering that your foreign company located outside of Spain is actually a tax resident company, or even worse, to consider that this company has just been created in order to avoid taxes, is qualified as an instrumental company, but this is more a case-by-case scenario that has to be analyzed. But of course, these red flags must be mentioned and must be analyzed. As you can see, thinking ahead, go ahead, please.
Sorry, just to understand what you mean as an instrumental company. So, I mean, are you saying that? Do you mean that companies who are, which are created abroad will then still be taxed as Spanish source companies? Are you talking about this phenomenon?
Mm-hmm. Two things happen here. The first one is that the Spanish tax authorities would say, well, Sean, your company is being managed from Spain, and there's no structure, no business director, no accountant, no reason for the company to be located abroad. And as you are managing solely from Spain, we could qualify this company as a Spanish tax resident company. That's why, for instance, Estonia has this lesson very well learned. When they engage you with this sort of services of creating an e-company in Estonia, they appoint a company director in name only. They appoint a board of administration, which are the members of this company that are located in Estonia. They have an accounting team in Estonia, and they create a tax address office in Estonia. So if ever Spain comes knocking at the door and raising a tax audit, they will say, well, it's true, you actually have the structure in Estonia, so we're not going to qualify this company as a Spanish tax resident company. That's the first thing that I was talking about. Mm-hmm. The consideration of a foreign company being qualified as a Spanish tax resident company. The other thing that could happen is that Spain could consider that your company is using the structure of having a company to split your income between dividends and salary, or even to just distribute to yourself a small amount of salary and don't distribute income as dividends and create a big remnant of your profits in that company. Spain would say, well, we don't accept that. Most of the countries of the European Union won't accept that. So there's a EU regulation, which actually what says is, we expect you to distribute from this Estonian company or from this abroad company at least 75% of the company profit to your pocket. So it's a middle ground. We're not going to be extremely picky and qualify all that income as general income, but we're expecting that you don't leave a lot of money inside of the company. So at least 75% of the company profit must be distributed into Spain.
Okay, got it. Especially when it comes to Estonian companies that say, why do you feel like it's such a popular option for people nowadays? Like, just to understand, we have a lot of clients that come in that have the Estonian company set up or are looking into it. Why is it so popular in your opinion?
Well, I would say that they used to be very popular, but as a friend of mine says, once your mom starts talking about Bitcoin, it's time to de-invest in Bitcoin. The reason of the Estonian company was when the e-companies were created, the e-business were created, this was something entirely new. Estonia proclaimed to itself that you could incorporate a company in Estonia without traveling mostly to Estonia, that the corporate income tax was non-existing as long as you didn't distribute dividends, and you didn't have to pay social security contributions in Spain, and Estonia and Spain have a totalization agreement, which means that if you're paying social security contributions in Estonia, you will still be covered in Spain when the time comes.
Yeah.
But this is great. This is great up to a point, as long as you're not planning to do anything shady, as long as you're not planning to say, hey, I'm not going to report my income. I'm not going to say to tell the Spanish tax authorities what I have, because Spain and Estonia, and we will come back to this later, have, of course, an international tax treaty, which means that they actually exchange information, the one with the other. And at the same time, Estonia and Spain are both signatories of the CRS, which are international treaties that are called Common Reporting Standard, which means that every tax authority can knock at the door on another tax authority and say, guys, what do you have about this guy? And go even to a bank in Estonia and say, what do you have about this guy? Please tell me the information. Okay. So people have to be very careful when it comes to Estonian companies. People think that you don't have to pay taxes on the dividends, which is wrong. You have to pay not only taxes on the dividends, but also corporate income tax when you distribute those dividends. Mm-hmm. People think that Spain will never know the income of the company or the balance of the company, which I said is wrong. People think that you are done with the social security contributions. It's not correct. You still keep paying social security contributions. And people even say you just need a company over there, incorporation, and you don't need, as we were saying before, a board of directors, you don't need an administrator, you don't need an accountant, you just have to incorporate with the company, and that's it. Of course, the Estonian firms have improved over the years, but this used to be a really good idea at the beginning, and nowadays it's just a good idea, but depending on the business that you're expecting, it could not be the best. And depending on the income you're perceiving or your plans or your cash flow needs, which of course make a huge difference, there might be other alternatives that could be convenient.
Well, good ideas of when it's a good idea to, keep a company there. What type of businesses or what type of situations is it suitable for to have a company in Estonia? And what's actually the benefits rather than just having the company here in Spain? So, and like if I were to want to create a company there and keep it there, what are sort of like the basic things that I need to get right? What are the things what are the common mistakes I should not be doing?
People think that just for the fact of having a company in Estonia, which is already paying its taxes on your salary and on the social security contributions, you're just done. Of course, that's not how it goes. You still have to file a tax return in Spain. You have to apply the tax credit based on the Estonia and Spain double tax treaty to don't be taxed twice, but still you have to pay taxes in Spain, not only, as I was saying, on the salary, but also in the dividends in case you decide to distribute them. You can always apply the threshold stated on the double tax treaty, so you're never paying a lot of taxes in advance in Estonia. But as I was saying, this is very useful as long as you understand that you are going to be paying social security contributions in Estonia, which might be slightly lower. But by the end of the day, both the salary and the dividends are going to be subject to taxes in Spain, and you will have to pay corporate income tax in Estonia when you decide to distribute those dividends.
So if I'm going to be paying both in Estonia and in the remainder amount in Spain, is the only benefit just having slightly lower social security contributions in Estonia, or?
By the end of the day, yes. At first, no. When it was early created, people decided not to report, and as the international criteria to double check information and exchange of information was very poor, because we were talking about maybe 10 years ago, this was a good idea in order to start maybe not reporting everything, maybe not including everything, maybe keeping more than 25% of the company profit inside of the company. So back in the day might be a good idea. Nowadays, I don't think it's so much, and there are better alternatives, better equipped.
What kind of better alternatives are you talking about in this case? What do you see as increasing in popularity the last maybe year or 2 years, or what do you see for the future maybe?
Well, lately, what I'm hearing a lot and what I'm seeing people incorporating are companies in Dominican Republic and in Bahamas. Why is this? Because companies in Dominican Republic and in Bahamas nowadays are opening their doors and they're allowing people to open a bank account over there from the distance, not even needed to go over there. And you can incorporate a company which has certain profits. And the first one is that companies that, of course, meet certain requirements in the Dominican Republic, they don't have to pay taxes on the income that comes from outside of Dominican Republic. So this income that comes from all over the world, you might make 200K, is not going to be paying corporate income taxes in in Dominican Republic, which of course is great. This is the first and main benefit from this. There's no corporate income tax. On the other hand, you still would be paying taxes not only on the salary, but also on the dividends. But this is quite popular lately because Dominican Republic is not a signatory of, as I was saying before, is not a signatory of the Common Reporting Standard. And
Okay.
some countries qualify this still as a tax haven, which
Yeah.
means that they don't exchange information with this. So in case you say, okay, I'm going to make a lot of money and I'm considering maybe not reporting everything, I'm going to consider to keep it inside of the company, even if I'm paying taxes on everything I'm perceiving, then it would be a good idea to incorporate this company in Dominican Republic. Of course, this is a long walk. It's a little bit complex. You need
Mm.
professional advice, not only in Spain, but also in Dominican Republic or in Bahamas. But these are feasible structures.
Would this be considered legal in Spain? I mean, given the fact that Dominican Republic would be considered a tax haven and is not cooperating with the Spanish tax authorities, like to what extent is this legal if I were living in Spain and I have this income abroad from the Dominican Republic? Would this be considered legal, or is this start to get shady?
No, it's completely legal as long as you meet all the requirements, which I'm saying all the income that you perceive from this company is going to be paid in taxes. So you perceive a salary of 60K every year and you
Hmm.
pay taxes on that. Period. You're reporting,
Taxes
you
in
pay VAT.
Spain or in Republic?
Taxes in Spain, also in
Okay.
Dominican Republic, but in Dominican Republic, the amount you pay, you can deduct it from your Spanish tax liability. So that's one point. Dividends you might perceive from this company in Dominican Republic will also be taxed in Spain. And as long as you pay taxes on that, that's completely normal. And as long as you meet all the other requirements of this sort of companies, which are, as I was saying before, having the proper structure in the country abroad, to have this company incorporated and meet all the requirements to be qualified as a Dominican Republic tax resident,
Hmm.
and that this company has this structure, has the employees, all of this. And at the same time, as we were saying before, you distribute into your pocket at least 75% of the company profit, there's nothing Spanish tax authorities could do. You would be saying, guys, even if you want to investigate, which is extremely hard for you because Dominican Republic authorities make their money by being reluctant to every sort of cooperation. Even
Hmm.
if you wanted to, I'm telling you the truth. I'm paying no corporate income tax. I'm paying no social security contributions, which is quite beneficial in Spain. On any other aspect, this company is completely legal.
Okay, got it. And how does it, often I hear about these more remote countries where if you set up the companies in those, Caribbean countries, that sometimes banking is an issue, getting access to proper banking services. Do you see this as a potential challenge for people setting up a company in the Dominican Republic, or how do you see this?
Well, I see that with time, these countries eventually decide to open their borders. I mean, they are islands, but they cannot remain as islands forever.
Okay.
Eventually, they have to say, okay, yeah, we will allow you to come here and open a bank account, and with your Spanish passport or your American passport or whatever kind of passport you have, come into here, open a bank account, put your money. Of course, this is going to cost you a lot of money to do this process, but we will allow you to do this. Or even, as I was saying, doing this remotely. So in my experience, it's happening more and more because these countries are opening more and more their borders to foreign investment capital.
Mm. At what income level should I start thinking about incorporating these sort of foreign company setups? At what point does it you think it makes sense to think about it?
Mm-hmm. Well, this is kind of one of the most typical questions. And usually a lawyer answer would be, this depends. And I'm going to try not to be a typical lawyer. In this case, I'm going to say from 150 to 180K,
Okay.
usually around 180K. But not only because of the tax rates, which as we were saying, this is completely beneficial, but
Hmm.
also there might be other reasons that you say, okay, I'm going to incorporate a company to carry this business activity. The first thing is the liability. As you know, when a company is liable, it's only the company who's liable, not the shareholders, not the directors, unless they do something extremely wrong.
Yeah.
This is extremely different from the liability of an individual taxpayer. If you, as an individual freelancer, make a mistake that comes into civil responsibility, you and all your wealth are responsible for the debts that might come from that. So sometimes, depending on the business you're in, you might say, okay, I'm going to incorporate a company, and this company will be the one having the business relationships with my clients, because in case anything goes south, I don't want to be the one having to pay the complete debt. This is one of the principal and main reasons for this. Another reasons could be that you want to split the services you provide, and you want to keep as a freelancing doing some services and the company doing another, or the company creating a company in order to avoid some competition law issues. In case, for instance, you are providing services to client A and you want to provide services to client B, but client B is competition of client A. So in that case, you might consider convenient to incorporate another company who will provide the services to client B. Of course, another reasons could be that you want to have employees, which is way more easier if you are a company instead of a freelancer. If you want to access to bank financings, and sometimes in case of commercial image, in case you say, well, my clients prefer to deal with a company instead to deal with an individual, yeah, could be convenient to, in those cases, incorporate a company.
Okay, got it. All right. We're gonna shift a little bit gears here onto maybe some of our sub questions. We'll be starting with the topic of online businesses. So we have a lot of people coming in who are often solopreneurs. They're starting, maybe their digital marketing agency or starting an e-commerce business. And they often come up with the most common question of like, hey, should I set myself up as an autonomo, or should I create a company in Spain or in another jurisdiction? What are the advantages and disadvantages when I think about this question of should I go the autonomo route? Should I go the company route? When does it make sense in both of these cases?
Well, as we were saying initially, the main difference is how much income are you planning to be receiving in the future?
Mm.
Because of course, as you can imagine, the advantages of one structure are the disadvantages of the other one. The advantages, of course, of being a freelancer is that this is the easiest way to start a business. You just need a tax form, the registration in the Spanish Social Security, and you're good to go. You get a flat 85 euros monthly rate in the Social Security contributions during the first year of business activity. You do not actually need to carry a business an accounting as a company. You just need the VAT books, which an accountant can do that for you quite easily. And there are no incorporation costs and no minimum share capital.
Yeah.
As you can imagine, the disadvantages of being a company is that it's complicated. It takes from 4 to 6 weeks to incorporate a company. You need to put a minimum capital of 3K. Of course, this incorporation will cost you around 2K for incorporating a company. The Social Security contributions still will be something like 250 euros per month at first, and you need to carry an accountant. You need a proper accountant. You need to carry VAT books. You need to be holding all of this accounting in a proper system. You need a GDPR system. So it's easier to incorporate as a freelancer. It's more difficult to incorporate as a business. But then goes the other way, which means once incorporated and once the honeymoon has ended and the business is ongoing, the freelancers find some issues, which are the backside of this, which is that the Social Security contributions start skyrocketing, and they will go in 2026 up to 31.5% of the business profit, up to 1.4K per month, which is a lot. Again, in Spain.
Quick question. So, sorry to interrupt, but you were talking about the honeymoon period before. What is the honeymoon period for people who don't know what that is?
I would say that it's like the first year and the second year. The first year in which you just have to pay 85 euros of Social Security contributions, and the second one in which during these 2 years you can profit from a 20% reduction on your taxable income, something that if you want we can discuss a little bit later. Because these 2 years, it's really nice. But the problem is that after these 2 years, Social Security contributions skyrocket and you lose this 20% reduction on the taxable business income. Of course, if you are a freelancer, you have to pay taxes on 100% of the business profit, not being able to put a slightly percentage inside of the company as a remnant or profit and don't distribute it or use it to invest. And as we were saying before, you are the responsible for the business liabilities. All of this, of course, doesn't happen when you're a company.
Okay, got it. So I guess, does it make a difference at all? For example, let's say if I'm starting an e-commerce company, is it fine to do it via an autonomous status, or would I really need to start a company for it?
The business you are in, actually, unless the regulations and licenses require you to be a company, I'm not an expert on that side of things, unfortunately, there makes no difference.
Okay, all right. So I guess, in short, Autonomo is, great, especially in the beginning and also with the lower income levels. at least up until you mentioned the 150, 180K mark, where
Mhm.
at least for the first 2 years, the Social Security being so low and also the 20% reduction in the income tax bill that you can apply for. Okay, got it. And what's one thing that some people perhaps don't understand in terms of a disadvantage of having the company? Because we've seen from other clients or some other advisors, they mentioned that some people don't realize that when they shift over into a company, their social security contributions can skyrocket versus the autonomous setup, or at least versus the first 2 years. Is that something you also see? Maybe a misconception that people have?
When people incorporate a company, they usually are warned that the social security contributions will rise and all the red tape that this incorporation has.
Hmm.
But once you want to carry a business into a more structured manner, into go into the big game over 200K, 300K, then it's way convenient to incorporate a company. It has some backsides in case your income doesn't reach these thresholds, because of course, an accountant of a company is usually 400% more expensive
Hmm.
than an accountant for individuals. Of course, you have not only to file the quarterly taxes, but you have to file the corporate income tax, the annual accounts, the mercantile books, which is a little bit more of red tape and administrative issues for a company, which, of course, as we were saying, it's more expensive for them. But
Mm.
by the end of the day, as long as the income is sufficient to cover those expenses, or the business owner understands that these expenses have to be dealt with, usually I don't see any backside from this.
We'll shift onto the next thing. What you mentioned before about the 20% reduction of the income
Mm-hmm.
tax bill. So as you mentioned before, I think most people, or at least most clients that I speak to, know about the Social Security cap of I think what 80, 85 euros for the first 2 years as an autonomo. But most people don't seem to know about the 20% reduction of the income tax bill for people that are either going into become autonomos or people who have already been autonomos for many years and then they just hear about it for the first time that they could potentially apply for it. Why is it that most people don't seem to know about it? Why aren't historians explaining this to people or trying to get them to apply for this? It seems like such an easy win to me.
Mm-hmm. The answer is because of caution. Usually, accountants and tax advisors tend to be cautious. Indeed, there's a 20% reduction on the company profit for the first 2 years of the business activity with profits. So if you as a freelancer, you carry a business activity and the first year you have losses, that's okay. If in
Hmm.
the following two you have profit, you will be able to reduce this business profit in at least 20%. However, one of the main requirements is that this is a new business activity for you. So in case you come from outside of Spain and are going to be carrying the same business activity, some of the gestores would don't recommend or even ignore this mention, because the main requirement is that, as I was saying, it must be a new business activity in order to profit from this 20% reduction. However, in more than a decade of experience, I have never seen Spanish tax authorities challenging that this is not a new activity, so you are not entitled to this 20% reduction. Of course, the Spanish tax authorities, they can send a letter to foreign tax authorities, but they
Hmm.
have never seen it reach this extent. Furthermore, what you can do is register in Spain under a different business activity than the one that you are in the States. It doesn't have to be exactly the same one. You can just differ slightly, and Spanish tax authorities will eventually have to accept that you are dealing a different business activity because you are under a different economic activity epigraph. Therefore,
Yeah.
you must be entitled to this reduction.
Okay, so I guess in short, people are overly cautious and they just sort of ignore it. Is it? I also get the feeling sometimes. So for some historians, they feel like they want to make their life a little bit easier, and they don't want to file for additional paperwork. Do you get the sense as well, or is it just me?
This is more like an investment behavior. When you invest, you might have high risk tolerance or low risk tolerance. Depends
Okay.
on the qualification of the investment you want to make. In
Hmm.
case you have low risk tolerance, your accountant is going to play it safe. He's not
Hmm.
going to apply for this sort of reductions. Why? Because there's the chance that you get a tax audit.
Hmm.
And if you thought IRS was hard when it comes to taxes, Spanish tax authorities say hold my beer, because they are extremely harsh. They can start a complete tax audit. They can go backdate for even 4 years. So it's better that you're sure that you have everything in line, properly documented, and you are able to prove that you're having a new activity. So in order to avoid this, and the fact that, of course, facing a tax audit is never something an individual would like, a business would like, usually tax accountants prefer to play it safe. So there's the option that, of course, your accountant says, well, Sean, would you like to apply this 20% reduction? As long as you understand the risk, as long as you understand that you might face a tax audit demanding more information and you can live with this and you can sleep at night properly, then we're going to play for it. In case you're not, then you do not suggest it. So this depends on a more case-by-case scenario. You don't, unless you're 100% sure that you meet all the requirements, usually people don't apply for this because, as I was saying, this raises a tax audit.
All right. So, I mean, if I'm in a pretty clean situation and it is maybe my first time being an Autonomo, I should be completely okay then, I guess.
Completely. Or, for instance, you have been an employee, let's say, of a marketing company, and then you decide to fly solo, and you're going to incorporate in Spain a business activity as a freelancer. It's completely normal. If you were a freelancer abroad and now you come to Spain and you want to carry the same activity, then it might not fly.
All right, got it. And for a lot of people, as they've been Autonomo for a few years and they actually, kind of missed out on this for the first 2 years, are they able to apply for it retroactively, or have they just sort of missed the chance and now they should think about more about maybe shifting to a company instead?
You can, but you must be aware of the consequences. You can deduct the expenses for 4 years since the invoice, but the 20%, you cannot just say, okay, give me my money back. You have to file a tax refund request. And if so, point A, the burden of the proof relies on the taxpayer. So it's now you who must say, before I was carrying this business activity, or I wasn't carrying any business activity, and now I want to apply for this 20%, which can be done. But again, as I was saying before, you might get a tax audit of your situation. So again, if you do it, it's good to have everything in line. If your situation is quite simple, then go for it. And you're playing by the rules and everything is in line. This is perfect. Otherwise, I would suggest not to move water.
Okay, then I guess, if I started it maybe 4 years ago, I could still have the chance now to try to retroactively apply for the 20%, as long as I feel like everything is smooth on my books. If I started it 6 years ago, therefore the first 2 years are outside of the 4-year period, I can't apply for it retroactively, right?
That's completely correct.
Okay, got it. Just making sure I understand it correctly. Cool. Then, next question. I think we maybe have already slightly covered this before, but is there a general rule of thumb or income level to help people decide between incorporating a company in Spain or just staying as an autonomo? I guess this is the 150, 180 thousand that you mentioned
the
before,
other
right?
elements as the liability of the company, the
Yeah.
different services, employees.
Okay. So in the case of this is a question we have pretty often. In the case of a Spanish resident receiving dividends from a foreign company, how does Spain's tax regime treat this income? And are there strategies to minimize the tax burden while complying with local and international laws? So how do I deal with dividends from abroad?
So, firstly, you must understand that savings income, including dividends, is one of the most benefited income that you can perceive. It's going to be taxed, as I was saying before, at a 28%. Still, you want to make it lower. Option A, make it non-existing. Go and apply before you arrive or during the first years for the Beckham Law regime. Then, while doing so, you exclude from the taxation the non-Spanish savings income. So these dividends are off the taxation. Still, they will be subject to taxes in their country of origin. That's option A. Option B, which is more simple, if you're already here, you can reinvest your dividends in a Spanish startup. If you reinvest those dividends, they are excluded from taxation also. And option C, which is convenient in case you are somehow owner of different companies abroad, you can incorporate in Spain something called a holding company and be the Spanish owner of the shares. Because in Spain, we have this structure that is called holding, which it comes from a company which its only business activity is holding the shares of other companies. And in case you have this, you can profit from a 95% reduction on the profit, the dividends, that come from outside of Spain into this Spanish holding. 95% reduction on the taxable income. Still, this company will have to pay corporate income tax in that remaining 5%. And when you distribute the money from the holding company into your pocket, it will be subject to taxes. Still, you can just get the money sitting there. You can buy different assets. You can buy assets to invest. You can dedicate to refurbishment, flipping properties, or you can buy a property and use it for yourself. So these are usually the ways to keep the money aside, or at least at a very low reduced taxation.
Okay, I have a few questions about this. Firstly, on the holding company, just for me to understand the real meaning of a holding company. So it's just a company that does nothing other than hold other assets or hold income dividend that comes from other companies, right?
It holds assets that can be properties,
Mm-hmm.
can be shares of other companies,
Okay.
or
And
you can hold a boat.
okay. And do these assets that this Spanish holding company owns or holds, do they have to be in Spain? Can they be abroad in other countries? Can it
Both.
be all over the place?
Mhm.
So could you run me through an example scenarios of where a holding company in Spain would make sense? So what would I have an Italian a company in Italy or a company in France that is my main
Mhm.
business, and then I funnel that income into a Spanish holding company, or what could be
Mhm.
an example scenario?
So let's say that you have a business activity situated in, as you were saying, in France, and this company is invoicing its clients and making 100K of profit every year. And
Okay.
you have in Spain a holding company that is the owner of the shares of the Swedish company, and you distribute that money into the holding company. You say,
Sorry,
okay, all
this
my
the Swedish
profits,
company or the French company? I didn't get that.
the Swedish company distributes
Okay.
all its profits to the holder of the shares, which is the
Okay.
holding company.
Okay.
This holding company, first, according to the Spanish non-resident tax regime rules, doesn't have to pay withholding taxes and doesn't have to pay taxes in Sweden on this distribution of dividends. So it comes to Spain. That's
Okay.
the first part. And then the holding company only has to pay taxes on the 5% of this income. So instead of paying dividend tax in Sweden on 100K, you have to pay corporate income tax on 5K in Spain, which is, as we already noted, it's 25%. So you would be paying 1.25, which is great. And then the other option is once you have this money in Spain, so from 100K, now you only have here, you have 98K, you can invest this money or you can distribute it into your pocket as dividends.
Mm-hmm.
But the thing is that you can distribute it as you want, and holding companies are not subject to wealth tax because their actual purpose is to carry this business activity, which is holding shares of another companies and managing them. And you can start investing, you can start buying properties for yourself. As long as everything is compliant, it's good to go.
Okay, so in this example, let's say, I mean, you mentioned this a Swedish company. So if I have my Spanish holding company that owns a Swedish company, and the 100K instead of paying corporate tax in Sweden, I just need to funnel this to the Spanish holding company. I then pay on 5% of the taxable income. Is that feasible that in Sweden I'm basically not paying any taxes? Would I not have to pay local taxes in Sweden first and then pay the remainder in Spain, or how do?
No, you pay corporate income tax in Sweden.
Okay.
You pay your corporate income tax, but afterwards, the profits of the company, the EBITDA after the taxes, you can
Yeah.
distribute them without withholding of dividends in Sweden because it's a country of the European Union. This is very important.
Okay, so does this holding structure only work for countries and companies within the European Union? I cannot do this for, let's say, the US or the UK. Does it not work?
In the US, it would work differently, and in the UK too. But mostly, this is extremely created for countries such as Spain and the European Union. In the case of
Okay.
the US and UK, would be profitable, but I would have to analyze that.
Okay, okay. So I guess in short, the way it works within the EU, I pretty much reduce my tax burden within Spain by 95%. So which is a huge, I would imagine. Okay, well, then skip over to the Beckham Law. So what kind of ways
Mhm.
could the entrepreneur use to take advantage of the Beckham Law? So you talked about this briefly before. What are sort of the typical entryways for them to get onto the Beckham Law as an entrepreneur? What other creative solutions are there to get onto this, and that might involve maybe a business partner?
Mhm. The first one is obtaining a visa as entrepreneur, which is a little bit complicated because you
Hmm.
need this entrepreneur visa, which requires a positive report from ENISA, which says that your activity is actually entrepreneurial, that it gives profit to Spain, that is really good, that is something new, something never one has done before. And then you're eligible for the Beckham Law regime. Option A. Option B is that you are appointed director of a company in Spain that actually carries a business activity. So you would incorporate the company and I would be appointed as director of this company. As this company is going to be carrying a business activity, I can qualify for the Beckham Law regime. And option C, which is a little bit more complex, is that you incorporate a company or even an LLC abroad. You are the employer, you're the employee of this foreign company, and an employer of record company in Spain hires you to provide services to your own company. If you're able to do that, you are arriving in Spain as a consequence of a new employment contract.
Hmm.
Hence, you're eligible for the Beckham regime. It wouldn't be exactly as a freelancer. It would involve an employer of record company, which has, depending on the cases, quite high fees, but still you would be able to take advantage of the Beckham law.
And from a timeline perspective, when am I able to get onto this? So we hear often about the 6 month deadline, but we sometimes hear that it's sometimes a little bit flexible. And when do things start? When do things finish? So what ways do you feel that people can shift, or what are the things that they need to know about the 6 month deadline?
So the 6 month deadline applies two ways. You must arrive to Spain as a consequence of one of these scenarios. So you must arrive to Spain because you're going to be appointed director. You are coming to Spain because you got the entrepreneurial visa. You come to Spain because you got this employment agreement with the Spanish company. These are
Hmm.
the cases. You must arrive at least 6 months before the start date. That stops what the Spanish tax authorities accept. They don't accept that you arrive on January and then that you're hired on December. They will say, well, there's not a causality relation here. You need
Okay.
to come to Spain because of any of these circumstances. And then, since you have been registered as an entrepreneurial visa, registered as an employee of the Spanish company, registered as a director of a Spanish company, then you have 6 months to apply for the Beckham regime.
Okay, got it. All right, shifting on. What have been some of the best or craziest holding setups that you've seen directly yourself or heard about that has massively reduced someone's tax exposure as an entrepreneur? And how would you go about setting this up for someone in a similar situation? So would this be a holding a company scenario, or is this something different?
Well, this was to me, was very new. When I was working in a big four, one of the company directors, he wasn't perceiving the income himself. He was perceiving the income through a Spanish company. And to me, that was surprising. And the partner of that big four, he explained me something that used to be called the Irish coffee structure, if you may have been familiar with that. It's
No,
very interesting
first time I'm
because
hearing
back
about Irish coffee.
Okay, yeah, it was called Irish coffee and the Dutch sandwich because the Netherlands have also a similar structure in this case. What happens here is that you have a company which is the provider of services, which makes a ton of money and is located in this case in Spain. But the owner of the know-how of this company is not located in Spain, is located in Ireland. And every year, the Spanish company makes 100 of income. But the Irish company invoices the Spanish company and says, guys, I am the owner of this know-how, and my fees for the know-how are 99 of your 100. So even though the Spanish company made 100, is going to be paying taxes only on one, paying 25% on one of income. And then you're saying, okay, yeah, but the 99% has gone to Ireland. Ireland has had a 12.5% corporate income tax for royalties, or even lower depending on certain requirements, which reduced a lot. And
Hmm.
furthermore, what happened is that Ireland was accepting something called the non-dom companies, something that has recently disappeared, which makes that even that money can go to another company located in a different part of the world, in this case, was Bahamas, which,
Hmm.
as we were discussing before, it's a tax haven. it was the owner of the assets, and it had the bank secrecies. So by the end of the day, this company that this gentleman had was sourcing all the money through a completely legal structure from Spain to Ireland, and then from Ireland to the Triangle of Bermudas. The money disappeared over there, and he was perceiving a salary from this Bahamas company, which was, as we were saying before, completely legal. So this was crazy to me. Try to imagine I was like 24, 25, and to me this was like engineering. But yeah, it was exciting, to be honest. This reduced his taxation, you can imagine, extremely a lot. Maybe from 100, he had to pay by the end of the day 10. So this was extremely profitable for this person. And still, this person had all his assets in a completely legal structure
Yeah.
outside of the European Union and outside of the eyes of the Spanish and foreign tax authorities.
Crazy. And I mean, you said mentioned that, this is something that it can no longer exist. I mean, you said they changed this a few years ago in Ireland. So how would you go about maybe setting something similar up for someone in a similar situation?
If you wanted to create something similar, a few things now must be met. The first thing is that since then, Spain created something called the length arm rule. All the European Union says that if you're going to charge someone, if you're going to charge yourself, this must be according to the market value of something. So maybe the Irish company wouldn't have charged 99 for this know-how. Maybe it would have been 60, 70. So it has to be according to market. This is
Yeah.
very important now when it comes to companies. You cannot invoice for more or for less than the market value. It must be a reasonable markup.
Hmm.
On the other hand, as I was saying, the second thing that has happened is that the Irish company, owner of the know-how, now doesn't apply 12.5% of the services. However, there are other companies, there are other countries such as Bulgaria or Cyprus who
Hmm.
have a similar corporate income tax. Bulgaria, as we said before, it's at 10%, and Cyprus, if you apply for the corresponding reduction, you can just get taxed on a 7 or 8%. And by the end of the day, instead of moving all the assets inside of Bahamas, you can move them to the Dominican Republic, as we were saying before, which, as we said before, it has an exclusion on foreign income. So all this income will not have to pay taxes and doesn't have to report to anyone who's in Bahamas, who has the money, etc., etc., etc.
Okay, got it. Do you have time for one more question?
Sure.
Okay. Basically, what has been one of the worst tech stories you've heard about with an entrepreneur doing their tech setup badly and they got huge problems with the tax authorities? What's some of, the worst scare stories you've heard about or seen yourself?
To be honest, you've heard of this too. The case of Shakira is extremely absurd. It makes this whole conversation really goes into the cornerstone of taxation, which is your tax residency.
Mm.
If you make a considerable amount of money, and if you make the huge amount of money that Shakira receives, you must be always, always compliant with your tax residency. You must make sure that you're going to be qualified as a tax resident in the country you are claiming that you are a tax resident. If you come to Spain and you have your center of vital interest and your husband lives in Spain and your children go to school in Spain and you spend your holidays in Spain, even though you're a famous artist and you go all around the world, you will have to claim that you're a tax resident somewhere else and prove it. You cannot just say, as she did, I'm a tax resident in Bahamas. You must, by the end of the day, say, no, no, I'm living actually in Bahamas. Here are all my statements. Here is all my social media. Here's all my documentation proving that I was for more than half of the year in Bahamas. So all of this conversation and the example of Shakira to me is very useful because it creates first the understanding of the tax residency rule. You cannot be living in every country outside of the European Union or in the European Union, stay most of the year in Spain and then claim that you're not a tax resident anywhere because this doesn't exist. Point
Hmm.
A. And point B, again, to the very origin of this conversation, tax planning, tax planning, tax planning. People need to plan their situation, need to be confident and need to play by the rules, or if not, accept the risks of a bad planning.
And do you see people getting audited often for tax residency? At what income levels do you see people already getting audited for, the Spanish authorities asking questions of like, hey, you should actually be a tax resident in Spain. Why aren't you declaring things properly here? Do you know if there's a certain tipping point where it makes sense for the tax authorities to start knocking on your door and start asking questions?
Well, depends on two things. The first one is your wealth located in Spain, and the second one is the breadcrumbs you keep giving to Spain. So maybe breadcrumbs is not the expression, the hints you give in your way. If you have a huge property in Spain, Spain would eventually, every 3-4 years, send you a letter and say, well, Sean, we know that you have a property in the Balearic Islands, in Mallorca, and that it's worth 2 million euros. We expect that someone who has a property in Spain of 2 million euros, either he's a very high net individual and doesn't step Spain, or this person is actually living in this property. So therefore, could you please show me where are you a tax resident? That's point A. And point B is people who are registered in the local town halls, doing something called the empadronamiento.
Yeah.
People who are in rental agreements, because the landlord will report the NIE of the tenant to the Spanish tax authorities, or those who eventually provide information to different Spanish entities with their NIE and have a continuous activity in Spain. If that happens, the Spanish tax authorities will eventually knock at the door and say every 3-4 years, because they want to regularize the past, and they will knock at the door and say, okay, Sean, where were you a tax resident in 2023, 2022, 2021, and 2020? And then, unless you can prove it, you are in a problem.
Okay, so even as something as simple as a rental contract can already put me on the Spanish tax authorities' radar.
Indeed, if your landlord decides to actually give your NIE to the Spanish tax authorities when he files the tax return, because my clients, when they file the tax return, they have to say, oh, by the way, this is the tenant I have, and this is his NIE, and this is the amount he has paid. This is like a hint of information for the Spanish tax authorities.
Okay, got it. All right, I think that's pretty much all for today. But I mean, thank you so much, Jose. I mean, you've been amazing. And yeah, hope you enjoyed this as well. Hopefully the questions were all right. And
It's been really fun.
All right, then. Fantastic, Jose, then.
Hey everyone, thanks for watching the interview. If you thought this was helpful, make sure to like the post, and please, if you're watching this on YouTube, click the subscribe button to stay tuned for more helpful tax content for you and your friends. If you haven't joined the community yet, I'll leave a link in the description for you. Alright, bye bye now.